Imagine a monkey living in a bustling jungle economy. Here, green leaves are the local currency, and bananas are the everyday goods he buys and sells. Our monkey wants to get ahead, so he starts gathering assets. An asset is simply anything he owns that holds real, tangible value. Some assets are small, everyday items he uses constantly, like a banana phone or a fresh pair of monkey sneakers. Other assets are much larger and hold the potential to build wealth over time, like a massive banana tree or a sturdy monkey house. Looking around at his impressive pile of trees, houses, and sneakers, our monkey assumes he is one of the wealthiest apes in the jungle. Identifying the value of what you own is a great start, but it only tells half the story of how much you're actually worth. To find the truth, we have to look at his liabilities. These are the hidden debts he owes to others, like a loan for his monkey car or the leaves he owes on his credit card. Net worth is the mathematical reality that appears when he subtracts those liabilities from his assets. In this case, he has 500,000 leaves in assets, but after subtracting 300,000 leaves of debt, he is left with exactly 200,000. A massive pile of assets is essentially a hollow shell if hidden debts cancel them out. That final number, the net worth, is the only true measure of his wealth. With 200,000 leaves to his name, the monkey wants to grow his stash without spending every waking hour climbing trees for a wage. He considers starting his own business, but the risk of losing everything on a brand new venture is too high. Instead, he decides to buy stock in the banana company, a massive, established business that already knows how to turn a profit. This purchase gives him equity. By buying stock in the banana company, the monkey now legally owns a small piece of that business. Even though it's just one piece, it makes him a fractional owner of every tree, truck, and banana the company possesses. Now, as the company sells more fruit and becomes more valuable, the value of the monkey's piece grows automatically. This ownership means the monkey is participating in the productivity of a massive machine. His wealth grows because the business is doing the actual work of generating value. As the seasons pass, the monkey observes that the jungle economy doesn't move in a straight line. He watches as the entire landscape shifts through massive, unavoidable cycles. During a bull market, everything is optimistic. As these vines grow and bloom toward the sunlight, asset prices naturally climb as everyone expects the good times to continue. Then comes the bear market. In this drought, the vines wither and asset prices rapidly drop as fear spreads through the jungle. These cycles are simply the economic weather. A prepared investor learns to expect the drought without panicking, knowing the bloom will eventually return. The monkey realizes that even in a good season, a single targeted storm could destroy the banana company and wipe out his equity. To protect himself, he diversifies. He uses some leaves to buy into coconuts and apples, so he isn't relying on just one type of fruit to survive. However, if a massive hurricane hits the whole jungle, everything might lose value at once. To survive a disaster, he needs assets that react to the weather in opposite ways. This is a hedge. On this graph, the green banana line and brown coconut line move in opposite directions. Heavy rain is a disaster for bananas, causing the green line to plummet. But rain makes coconuts thrive, causing the brown line to spike. The gain in his coconut investment offsets the loss in his banana stock almost perfectly. Even in the middle of a storm, his overall net worth stays level because his assets were positioned to balance each other out. This shows that long-term wealth is built by neutralizing risks, ensuring that no single event can take the monkey out of the game. Later, the monkey hosts a dinner party. He's relaxed and confident, no longer worried about daily ups and downs of the market. He understands his assets, he's managed his liabilities, and his hedges are ready for the next storm. As his friends listens a logic of tracking assets and protecting what they've built, the intimidating world of finance begins to feel like a set of basic survival skills. All that complex jargon is just a different language for practical tools. Once you see the mechanics underneath, anyone can learn to navigate the jungle like a pro.